Hello, my name is Ashish, and today we are going to discuss the multi-asset category, which is currently one of the fastest growing segments in the world of mutual funds. Now, the appeal of this category lies in its structure, where these funds have the flexibility to invest in a variety of asset classes, primarily encompassing equity, debt, and gold. In fact, some multi-asset funds also include real estate investment trust and common derivatives and commodity derivatives in the portfolio. Now, it's worth noting that according to regulatory guidelines, multi-asset funds must include a minimum of three asset categories, which with at least 10% allocation to each category. Now, in my perspective, this asset category has the potential to become one of the most significant in near future. And as a result, we have decided to delve deeper into it. Now, to help us do that, we have invited Usha Nair. She is a senior vice president and a very experienced professional from DSP Mutual Fund to discuss multi assets fund with us. With this, I would like to welcome you, Usha, and let me start by asking a fundamental question: that how would you describe a multi-asset fund, and what do you think? What is that need which this product category fulfill?
Thank you, Ashish. Thank you for giving us this opportunity. I'm delighted to be on the show with you. So let me explain what a multi-asset allocation fund is with a small example from what we call is the magic of chemistry. Now, all of us are familiar with what is known as aluminum foils. We use it extensively to wrap our food. We send rotis to our children in their lunch boxes by wrapping up those rotis or chapatis in the aluminum foil. And once we take the chapati out, have the lunch, the child or all of us, we will just crush it in our hand and probably put it away in the waste paper bin. So it is a very flimsy, or in Hindi agar bola jayega to patla, it is quite thin and flimsy. It's very patla in terms of the structure of the aluminum foil. Now, aluminum foil is 99% of aluminum and 1% of what you call in chemistry as trace elements. अगर आप ये 99% aluminium, this 99% of aluminum in the foil, अगर आप उसमें से 7 or 8% हटा के, if you remove 7 or 8% and replace it with materials or metals like zinc, magnesium, copper, etc., you're making a very small change to that aluminum foil composition. The aluminum that is then made is known as aluminum 7075. It is an alloy of aluminum which is used to make aircraft bodies. So it is a very important constituent of chemistry. In fact, isko alchemy bola jata hai, isko magic of chemistry bola jata hai. This is actually so unique. It is like a magician playing with different, balls when he is doing a magic show. So you can change a small component of a basic material and make it from a low strength to an extremely hard and high strength, high tensile kind of a material, which can be made into an aircraft, which can carry tons of weight. This is exactly, if this concept can be replicated in investing, can you make a portfolio which is of 4 different or 5 different asset classes that you usually invest, right? Like you very rightly pointed out, debt is there, equity is there, fixed income is there, REITs is there, international equity is there. Iska right composition agar main balance karu, and if the portfolio can be created to be a strong portfolio which can withstand turbulence, that is what multi-asset allocation does to you.
Wonderful, excellent example, Usha. I think I was thinking about the coffee I have here, right? So it's a
Yes,
few, it's maybe maybe less than 0.5% of coffee, and rest is
yeah,
all water. But it has completely changed the composition of what it is. So
absolutely.
yeah,
That's a very correct example again of issue. Now your coffee example, the more coffee you add or a little more of water, the whole taste changes. Or if you're
exactly.
someone who drinks coffee with milk, it all
Right.
should come in right composition. And
Right.
that is what is multi-asset allocation for you.
Excellent. I think that's a wonderful example, and that brings me to my second question: that how do we determine what is that composition? Right. So you spoke about you gave an example of aluminum foil. We spoke about coffee. How this is going to work? Uh, so how you think people should look at when it comes to what should be the composition of different asset categories?
Sure. So let me give you two parts of the answer to that, Ashish. Till about March 31st, any advisor who advises his clients, or any client himself, if you want to do asset allocation, you had the freedom to do it. And what was so all of us as investors, all of us as different advisors who would be watching the show would know that they themselves can suggest asset allocation to their clients. Somebody can say, you're a conservative investor, put 10 or 15% in equity, let's put 70% in debt, and little bit in gold or real estate, etc. If I'm an aggressive investor, my advisor or my partner would suggest a different allocation to me. Unfortunately, on March 31st, Government of India through the taxation made a change to this process, because fixed income, which is through debt funds, and gold, which you were investing through gold ETFs, and international equity, which we were buying through either a active equity fund in the international market or through the passive space. All of this, the indexation tax benefit that was available has got removed. So now, if I'm an investor putting money in fixed income or in gold or in international equity, to do my right asset allocation, say it is 20%, 30%, whatever is that. That depends on how my risk profile is assessed by my advisor or my distributor. It still does not allow me the tax benefit, because tax I have to pay on these investments have now come to the highest rate of tax, which is the marginal rate of tax applicable to me as an investor. Till March 31st, we were getting the benefit of indexation of these three asset classes. The only asset class where the rule of equity taxation continued is for domestic equity assets. So my choice as an investor to do asset allocation on my own or through my distributor has been taken away from me. Through a multi-asset allocation, you to allocate to all the four major asset classes that we discussed, which is two equities, domestic equity and international equity, and fixed income and gold, all the four asset classes which are essential for a client's portfolio, through an indexation rule, still persists through the fund route, which is a multi-asset allocation fund, which is why today it is extremely important for a client to consider this category. The choice of doing it otherwise is taken away from it. Now, coming to the second question, Ashish, that how would you do it as a fund house? What we propose in a DSP multi-asset allocation fund is to have 35% minimum of domestic equity at all points of time, 10% in fixed income at all points of time, and 10% in commodity at any point of time. And you gave this in your introduction, where you said minimum three asset classes have to be there, and there is a minimum threshold the SEBI has mandated that each of these asset classes should have. So for our fund to get the indexation benefit, we will keep 35% in domestic equity, 10% in fixed income, and 10% in gold at any point of time. So that totals up to 55%, 35 plus 10 plus 10. We are left with 45% of the 100 rupees to now allocate. Some portion of that will go into international equity, and you will increase the debt and the gold asset allocation depending on your outlook on what you think will do better in the next 1 year, 2 year, 3 year kind of time frame. If equities become inexpensive, agar equity sasta ho jayega, so we will increase the equity allocation from 35% to say 50%, 60%, 70%. If fixed income looks attractive, if 10-year GSEC rates have gone up and you feel that rate cut hone wala hai abhi, so that means your view on fixed income is more positive, then you will slightly increase your allocation to fixed income. So 55%, 55% is fixed, and the balance 45%, you will see that we are allocating it depending on the market environment. But from a client perspective, all these 3 or 4 asset classes, जो उनके पास आज अपॉर्चुनिटी नहीं है, करना है, लेकिन टैक्सेशन के वजह से वो अपॉर्चुनिटी निकल गया, that is something that this fund will offer you in a very systematic manner.
Got it. So I think Usha, thanks for this. ये बहुत important है, because unlike other categories, like let's say for example flexi cap or a multi cap, there the allocations are decided. The only difference can be security selection, right? Whereas in case of multi-asset, the difference between asset allocation can be significant as compared to other products, right?
Absolutely.
And I think, which is, so I'm happy to I'm happy to hear from you.
And Ashish, I want to interrupt here and add one study which was done famously by JP Morgan, where it was said that 91% of the result in a portfolio is an outcome of right asset allocation rather than just stock selection. जबकि हम सब लोग ये सोचते हैं कि stock selection is the most important driver of returns, but over a long period of time, studies in the US etc. show that if you have done right asset allocation, a large battle is won from a portfolio.
Got it. And I think that is what I would like to, sure. No, perfect. And that's what I would like to share with my partners here. See, so the important aspect is in a multi-asset allocation portfolio, asset allocation is paramount. Now, to do the right asset allocation, the capability of fund house is very, very important, right? So even though there are about 13 or 14 multi-asset funds with about 35-40,000 crore of assets, I think it is important that which fund house we are allocating the money to. Because in my view, many fund houses in India have an exceptional capability when it comes to equity research, but asset allocation research is not everyone's cup of tea, right? So I think this is where I think a DSP multi-asset will score because of the depth of fund management team, the way you're speaking about the kind of research which has gone into building this product. So that's what I would like to share, tell to my partners who are listening this video, right? So that's keep that in mind that the background of the fund house, the research capability are very important, specifically when it comes to multi-asset fund, right? Because here you have an added angle of asset allocation along with security selection. So one thing here, right? One thing here, Usha. So see, I get the perspective of mixing assets, right? But at the same time, we also have balance advantage, which to a certain extent has been doing this for investors, right? And we all of us know that today BAF is one of the largest categories of where people are looking at investing. So how do I differentiate between these two asset categories?
Yeah, so that's a wonderful question, Ashish. And I've not had this question asked to me by a lot of people, and I'm very happy because I've been using this as an example to explain the evolution of portfolio construction. Like as students of biology or human evolution, we all know that there has been various stages in human evolution. I would say multi-asset is also an evolution that we as a community, you as a segment of distribution partners who you are dealing with, we as a community of manufacturers, we are bringing it to our consumers or to our customers. And I'll tell you why I'm saying. हम जब पहले हम लोग सब इन्वेस्टिंग करते थे या म्यूचुअल फंड का इनिशियल डेज में सबसे ज्यादा वी यूज्ड टू सेल इक्विटी फंड्स और फिक्स्ड इनकम फंड्स. This was generally what used to happen. People used to buy either equity funds, SIP funds, diversified equity funds, and then people who didn't want any risk, they started taking only fixed income products, liquid fund, overnight fund, short-term funds, etc. Somewhere there became an evolutionary stage where we created balance funds. That was actually the first asset allocation category that we saw. And there was also a monthly income plan. So I'm going a little less mutual fund product suites are concerned, and that's important for partners to understand that, especially someone probably who's a new partner to this business. So what happened is we got MIPs which had about 20 to 25% in equity and 80 to 85% in fixed income, and we did balanced funds which was 75% in equity and 25% in fixed income. But ये दोनों में आपको दो ही assets मिलते थे, Indian equity asset and Indian fixed income asset. But it was in a ratio which was static. It was most important is there was no dynamism in the asset allocation. It was a static number, fixed number hota tha. Then came the evolution of balanced asset allocation category or dynamic asset allocation category, जिसमें हम लोग we have got the dynamic asset allocation, which was moving between equity and debt in a dynamic manner depending on the market valuation. अगर market सस्ता है तो equity ज़्यादा कर दो, market महंगा है तो equity कम कर दो और तब debt ज़्यादा use करेंगे. Now you may also think that arbitrage is an additional category, but that category is treated in ways like fixed income only, because arbitrage ka behavior is actually that of a fixed income itself. So what happened is, from an evolution of a product category perspective, MIP होता था लो equity high debt, balanced होता था high equity low debt, and both of them in fixed proportions. Then came balanced advantage fund, which was dynamic asset allocation. लेकिन इसमें दो very important asset classes, which is international equity and gold, was missing. Now you move to multi-asset allocation category, where there is dynamism of asset allocation, and all 4 or 5 asset classes are very comfortably allocated, which is why I'm saying it is an evolution in the journey of product creation and consumer experience, and customers need to have additional asset classes in their portfolio.
Got it. Well explained, Dusha. I
So
think
you,
if I have
yeah,
to, uh, if can correct me if I'm wrong. This is my understanding. So we started industry generally start with the one, let's say, single asset class products, right? From there you move
yes,
into, generally speaking, multiple asset classes, but in a fixed proportion, like hybrid funds or equity savings or conservative hybrid funds, so on and so forth. And then of course the
right,
dynamic asset allocation, wherein equity and debt have been moving in dynamic proportion depending upon the fund managers, AMC models, etc. And now we are at our next level of evolution, wherein we have 4 or 5 asset, minimum 3, and it can go up to 4 or 5 asset categories managed dynamically by the fund house, right? So
absolutely,
that's how our industry is evolving. That's how our investors are evolving. That's how
yes,
our distributors are evolving, and
correct.
so the product has to, and so product have to evolve that way.
And you have very well summarized what I said, Ashish, that entire journey. So the positioning of multi-asset, especially the one we are offering, is above DAF in a risk return spectrum and one notch below the equity and bond fund from DSP, which is actually the aggressive hybrid category fund. So
Yeah,
multi-asset is positioned in between the two. That's
got it.
correct, but very well summarized, Ashish.
Wonderful. So one last question, Usha. Why? So what is the current environment, which you think is responsible for, okay, not really responsible. Why in this current environment people should invest in this fund, or in this
Yes.
category, so to speak?
Yes, yes. I would rather spend a bit of time on the category and the fund,
Sure.
to answer that question. It's very relevant again. Why now this fund?
Yeah,
Why are we talking about multiple assets at a time when everything is looking good? The
yeah,
precise answer is everything is looking good. Typically when you look at asset class behavior, Ashish, and as somebody who's tracked the market for long, you would know this, and many of our partners would also agree to that. There is no consistent winner in any asset class. Every year, if you study for 23 years in our presentation, there is data put up. And we have studied 4 major asset classes: domestic equity, international equity, gold, and fixed income. Each asset class has been a winner in every cycle. So, for a period of 2003 to 2007, equity was the winner. But there was a 6 year period where equity was probably the worst performing asset class. At
right.
that point of time, gold and fixed income performed very well. There is a period between 2011 to 2013 in India where Indian equity didn't do well, but international equity did extremely well. So it is, in some way, it is like a match of cricket or something that you can't predict who is the winner. When you look at a World Cup history, there are different countries who have lifted the World Cup every 4 years. Now, maybe there are certain countries who have lifted more number of times than somebody else, but
Correct.
that also does not happen in a consistent pattern. So, equity may be a winner more number of times, but there are a lot of
Right.
periods in 20 years where equity has not been a winner. And
Right.
last 2 3 years, especially post COVID, one asset that has delivered good return is equity. The valuations have gone a little more expensive than what we as a fund house is comfortable around. We are not saying it is in an extremely expensive zone, but definitely it is above your normal averages. Flows have happened, markets have recovered, markets are somewhere in an, for use of a better word, all-time high kind of a zone. And at that time, when you invest, usually experiences that next 3 years, 4 years, returns are moderate to below average. And that periods of time, if you have been able to bring a multi-asset dimension in client portfolios, अगर आप multi-asset funds में उस वक्त में invest करते हो, your experience is much better than what is otherwise seen. So today, the market environment on equity is a little expensive zone. Fixed income, gold and international equities are less expensive. So combining the two is a better option than only allocating to equity. But having said that, can I be out of equity? No, I cannot be out of equity as well. So this portfolio allows you to be reasonably invested in equity. At the same time, it brings in the flavor of other three asset classes or four asset classes which are not part of your portfolios. So one is expensive, slightly expensive nature of the markets and underperformance of other asset classes, which gives a positive vibe to be there in the portfolio, and hence multi-asset allocation at this juncture.
Uh, Wonderful, Nusha. So I think the way I think about it is, you said that no asset class is a winner, but asset allocation is a winner for sure, right?
Yes, always.
Correct. So I think that's a key takeaway probably for me from this our conversation, that irrespective of which asset class will win, and frankly nobody knows. In the long run, yes, the number of times equity will outperform will tend to be better. However, there is no certainty, and markets don't really, and markets are not obligated for, markets are under no obligation to respond to what we think, right? So I think in
Absolutely
that,
correct.
yeah, from that perspective, having a decent spread out investment makes sense, right? And especially in the time when one or two asset classes are doing very well, probably it's a better time to invest in these funds, not when
That's correct.
something will go, not when
Yeah,
something goes really bad, or maybe not the time to look at when everything will look probably not so hunky dory. So I think in
right.
that perspective, it's a good time. And I would also like to add for my partners that a lot of people are concerned about investing lump sum at this juncture. To my mind, this is a good product for lump sum investing. If people are really concerned that what happens to my money, what if the market falls by 10-20% in near future, or what if market continues to go up, right? So I think in that case, which is what we have mentioned earlier, balance advantage fund is always there. However, one should also start considering multi-asset fund. And there is one very interesting thing in your presentation, which talks about the completely different correlation among these asset classes, right?
That
So
is
you
right.
never know when global equities are doing well, when gold is doing well. So I think in that, if you put all of it together, that's why this can be a great portfolio, right?
That's correct. Yes.
So I think this is what I would say to all my partners. If you have a 3, 4, 5 year horizon and you are not very sure about which asset class or which product to invest in, but at the same time don't want to be left out, I think other than balance advantage, this is one product class which you should definitely look at. There is a lot of money people have in FDs, which they come and ask you what to do. I think this is one product which you can slowly convert people from FDs to this. Uh, we may look at equity returns, but if you look at most customers, a huge amount of their wealth is stuck in FDs. I mean, I don't. That's the word I would use, right? So this product will surely has a much better potential on a risk return adjusted basis, deliver much better return than FDs, right? So I would definitely not compare it what a pure equity product, right? But if I compare it with FD, if I look at current situation where people are not comfortable putting money now, this could be a great option, right?
So I can just, end with a small story we are all familiar with from
Sure, please.
Ramayana, where Hanuman was told to bring the Mrita Sanjeevani from the Drona mountains. And when he reached there, he didn't know which is the herb. So what he did is he just picked up the hill and came back. So
Correct.
what Ashish was in a way trying to say is also that nobody knows. And that's a very important aspect in investing, that we do not know which asset class performs well, which markets perform well. So we are also saying that you select all in your portfolio. We have learned by selecting two in a dynamic proportion in BAF or in DAF category. And this is the next step to progress, where you have 4 or 5 assets in dynamic proportion. So like Hanuman, let the portfolio also be very strong.
Fantastic. Wonderful, Usha. Thank you very much for helping us understand the whole category and about the fund. So this is my request to all of our partners here. I think this is a great category of product from a very reputed and a very research-driven fund house. So I would request all of you to consider this fund for your clients' investment. Thank you very much.